He's known one for a reason. He almost never shies away from sticking his neck out on a whole host of issues, be it markets, economy, or for that matter, politics. Shankar Sharma is a man who always speaks his mind. And there's proof if you follow his Twitter feed. Shankar, a very happy Diwali and welcome to ET Now. Are you feeling happy and festive this Diwali?
I don't want to sound too exuberant because large parts of India are still hurting on a variety of fronts, and so one should be a little sensitive towards that. But if you were just to talk about the stock markets, clearly there is, room for a lot of cheer. People are always perplexed and they keep asking me that how can people be hurting and yet the stock market be looking so good? So it's like a Jekyll and Hyde situation, right? And I tell them that the answer is complicated, but there is an answer. Why? Of course there is an answer.
So why this exuberance in the markets when such a large part of economy is hurting? We're still waiting for earnings. When are they going to come by? You've had GST, demonetization. Is the market running on too much hope right now? Would you even want to question it? Forget anything else. Do you want to question a market? Like they say, why fix it if it ain't broken? So the market in that sense is completely isolated from the reality right now. Would you even want to question why this exuberance in the market?
Yeah, but I've always said stock markets in India are only a 2 square mile phenomenon. It's Fort and Nariman Point.
Come on, yes. A large part of it is BKC
I have always,
also.
Okay, so BKC.
You're spending too much time in the bar, Shankar. Yeah.
Well, really speaking, stock markets are only a function of 2 things. One is growth, economic growth or earnings growth. That we all know is a bridge too far right now. The second factor is the cost of that growth or the price, the hurdle rate at which you discount that growth, which is interest rates. And I've said this over several quarters, even 2 years back, and India is not a growth bet. That's contrary to what everybody believes, but my view was that forget earnings, they're not coming through. Not for a while to come. But stock market will be good. So go figure. The reason is that even moderate earnings growth, the 0 to 5%, whatever we've been getting, when discounted with a lower cost of capital, results in a higher NPV. It's pure and simple a cost of capital market. So which is why you've seen the stock market and the real economy diverge so significantly. And go back to 2008 to 2009, that's exactly what the world also saw. From 2009, the big bull market started, despite no growth coming through for several years. And yet global stock markets have been an absolute tear. Reason is simple, that when you've crushed the cost of discounting growth by 80-90%, even bad growth starts to look good in NPV terms. The purely cost of capital has driven global equity markets, and that phenomenon shifted to India 2 or 3 years back. So my view was, don't even look for growth here, just look for a lowering of rates. We have gotten quite a lot, 150, 200 basis points over the last couple of years. I think you should hold out hope for more. So irrespective of growth, or rather despite that, markets will be very good.
Okay, when you say very good, you've always talked about tape reading. You're not a guy who's following the valuations. Yeah. What's the trend telling you? Is the market momentum likely to grow manyfold from here? Or do you think massive part of the rally is already behind us in the 3 years gone by?
No, I don't think they're behind. In particular, now India is not a single market, so again distinguish. Indian large caps are completely different from Indian small caps, and I have several times on your show said that Indian small caps are the single best place in the world to put your money in. I said this 2.5 years back. I continue to believe so. I think the small caps have just barely cleared their 2008 highs. I think 2008 high was taken out 3 months back. So it's not as if it's a jaded or a tired bull market. I think the bull market in small caps is still very, very young. In fact, it has just kind of started because you were here in 2008, you fell all the way here, you went back to 2008 and now you've just taken out. We'll talk a bubble when it has doubled from here, not when it has just reached a level of 10 years back. So it's a young bull market, it's not an old bull market. It's looking old because it has gone up so much. Okay, but in reality, despite going up so much, just barely cleared 2008 highs. So here is from where on you see the real small cap bull market, and which is why if you see in every correction, every single correction, small caps just go back as if nothing really happened.
Yeah.
Whether you take shell companies, whether you take, some other problem, something or the other keeps happening, and they will lose 20% in a week or 30% in a week, and before you know, they're back up there and beyond. Even like
it's like a child who's just learning to walk, who will get up. And
even the recent wobble, just in the last 15, 20 days. If somebody had gone to sleep and woken up 15 days, there was nothing. There were still very good stocks and very good markets. Small caps have to be bought. Every single dip in small caps is a buying opportunity. And I'll say this unequivocally.
It's been a 20% return in the small cap index from the last year to now. But again, the small caps universe is large and wide. You're seeing every new small cap emerge as a winner every now and then. And now the IPO market is also flourishing quite a bit. That's like a Midas touch, which is working right now within the IPOs. So when one talks about small caps, the one theme that you identified was specialty chemicals about a year and a half, 2 years back. That's worked beautifully. I mean, names like Iridice have jumped up, 64% year to date? And I'm not even talking about the year before that when you bought into the stock in just the last 1 year. Do you continue to stay put with that pocket?
That was, in fact, that went back even earlier, went back to 2013, 14, when we saw the environmental problems in China coming through. So it's a structural story there, just like cement, for instance. Okay, that cement struggled in India for 25 years. Then the cement companies got together. I won't call it a cartel, but they got together. Let's just say,
I'm not saying anything.
Exactly. So they just got together, said, guys, we have fought too much. Let's just arrive at some kind of
make peace,
some kind of decency in pricing, and see what has happened in the last 10, 12 years to cement. In chemicals, people fought each other for 25 years. Then people figured out that, look, by reducing capacity a bit, you can actually get substantially more prices, and capacities have been shut down by governments in China. Structural shift in that. If you look at chemicals across the board, in India, stocks have been just phenomenal. We were lucky that we saw that coming, and obviously we have participated. I continue to believe that that's a structural story for a long, long time to come.
But are there newer names that you're hunting, or are you staying put with a Kiri?
No. There are many names. Because chemicals is a wide area.
Absolutely, and each a different story.
Each very different story. In a single, it's not like cement or steel where broadly they are similar companies. They can be very, very different company depending on what chemicals they make. So we are hunting. We're still looking. There are many.
Okay. You also talked about some of these junk companies. I mean, it's interesting how you're seeing some of these albatrosses emerge from the ashes, right? I mean, it's the case of an HFCL, not Future Consumer, Fortis Healthcare, for instance, or a JP Associates of late. Is that a bottom-up story that you would at all like to hunt in?
Well, like I said, my philosophy is to buy things which people don't buy or people don't like. I mean, that is the way I look at markets. So, I got interested in infra when people had given up hope just a few years back, while people were very, very exuberant in 2007-8, and when I said that it's all rubbish and these companies are going to go down 80-90%. Same with chemicals. So steel last year, when I remember in 2016 February when I told people that steel has bottomed out, steel is going to be a great bet. And people say you're nuts. So who buys steel? And so that's my philosophy. Like it or don't like it, but I'm not interested in looking at the past. I learn from the past of a company or a sector, but the idea is to look forward, and that's where you're going to make the money, not sitting in the past. So I don't know about JP Associates. I've followed the story, but I never participated. But HFCL, terrific turnaround in the last 10 years, and market ignored it for 10 years. I mean, a company that takes turnover up 27 times in 7 years, profit up 100 times, and stock price remains flat for 7-8 years. It's
only just begun the move.
Yeah, just begun the move. So I like those situations. And people say, okay, so they had a problem, in 2001. Okay, so fine. Every company has a problem. The question is, has management dealt with that problem? So they have repaid debt. Okay, they've cleaned up their balance sheet. They've got a solid, the entire Geo thing has been done by them. I'm saying if you stay rooted in the past, you will not buy a single stock in the world, right? You have to forget the past and think. And that's true for whether it's a JP or an HFCL, or there can be any number of companies that have been through trouble. But my job is to go looking for those companies.
But are you going to stay put and have that conviction for the next 1 year to come? I mean, I'm trying to understand how long is this HFCL story? Is it for the next 2 to 3 years, or is it for your immediate gains, make the money and get out?
Well, I'm buying stock which is locked in. So I mean, I can't even if the stock goes up 4 times, I'm locked in for quite a while. So it's a preferential offer. So I mean, when you buy companies like this, you have to buy them with a 3 to 5 year view. You can't just buy them for a quick buck. That's not going to work at all. So I think the story is very good. I think they are now focused on doing the right thing in terms of transparency and governance, because every management likes a good market cap. Who doesn't? But there's only one way to get that, to do things right, not to take shortcuts, not to play the stock market game. That can happen, but that won't give you anything which is sustainable. All management in small caps go through that phase, and then they crash and they burn, and then the second coming, in the second innings, usually they are much more sober, much more careful. They know that, look, all that rubbish never worked. Let's just focus on delivering good numbers, good businesses. I like those situations. I like a guy who's been through trouble. The second time around, he'll be careful not to repeat the troubles of the first innings. So all my companies are second inning companies, and I don't like.
Where else are you hunting? HFCL is just one such case in point.
You mentioned it. I didn't mention it. But I mean, there are many. But I like second innings companies. First innings, I don't know who's going to be Virat Kohli, who's going to be Sachin. But after the first innings, I know who's not going to be Virat, or who's not going to be Sachin.
Okay. So where do you think the next winners are going to be? Let me just rephrase my question. You talked about infrastructure. It's a beautiful rally happening out there in an NBCC, NCC.
Yeah.
You talked about setting second innings, and there's one candidate who can emerge the next Virat Kohli. That's HCC. Do you like that story?
It could. I agree. And it has had a few situations where it looked as if it would finally emerge. I think the debt, remember, obviously we all know interest suffered because of the debt overhang. That's done and dusted. The question really is, can that debt be addressed by liquidation of assets or by recovery of dues through arbitration or something? Those are the key things you have to look for in infra play. If it is going to come out of conversion of loan into equity, then forget it. Then that's not going to really, really work. So unless there is sacrifice being made, number one, or there are some hidden assets in that company, or there are receivables which are stuck in various litigations and they recover that and then they are able to settle the debt. Otherwise, don't look at infra. So in HCC, we have to see. I hope it turns around. I like the company in its heydays. Then obviously went through trouble. I hope it turns around. I don't have a very clear mind on it, and that's not a place I'm really looking right now.
I remember about a year and a half back, you were talking about some of these two-wheelers, and you were pretty concerned about what demonetization and GST impact is going to be. Much unlike popular belief, if you were to just track those monthly sales data, you're like, whoa, where is that growth coming in from? Yeah. Have you changed your opinion on two-wheelers?
No, actually, I've liked autos. In the middle of, obviously, when a shock like that happens, then you have to really, sit and worry whether that will impact. But if it's not impacted, that's great. Now, look, the thing about autos is, if you even go back in 2008 when we were undergoing the crisis, that's actually the time when we actually turned bullish on Maruti and on Bajaj Auto. And what made us go bullish was in the period from, I think, middle of 2008 till January, February of 2009, which is really worst 6-7 months. Every single month, the numbers of these companies was good. Maruti, I think in November 2008 had blowout. It's like 35% growth. Or maybe in January 2009. I'm saying, we are all sitting here saying what is going to collapse and what is going to end. And here is this company turning in 35%. And that's not a small company. Even 2008 was a good sized company. Yeah. Those things make you sit up and take notice. Because, and I was in a blue funk thinking whole world is going to collapse. And here's a set of numbers. I'm saying, what's going on here? So same thing in, post-demo.
But that's not the case with Bajaj Auto. Bajaj Auto has had a very, very testing period for it. Now, slowly, you'd look at Bajaj Auto and you'd be like, this is the only one which has not performed. So can you bet on this? Growth slowly seems to be now coming back. Their monthly numbers are beginning to come back. Are you willing to ride the tide with them?
Yes. I like Bajaj. I like Bajaj as a management. I've said this publicly. In my view, outside of financials, private sector banks and all, I think the best managed group in the country. I mean, look what they have done. Forget about in auto, what they've done in finance. You know, they have executed businesses beautifully. They do it right. They do it in a cost-efficient fashion. They look at margin. They deliver high return on capital. They generate cash flow. They don't do trophy projects just because it's popular. I think they're very smart business people. So, and I've been a watcher for like 25 years now, and I'm a big fan of the Bajaj Group. You know, so yes, they have wobbles like every group does, but I think they will come through very well without any doubt.
That's auto, because finance is already a proven story.
Finance is already up and running. And
So you're willing to stay put in Bajaj
100%.
Auto?
Absolutely.
Okay. The other call that you really got it right about a year and a half back was metals. What a beautiful rally we've seen in metals.
Yeah.
Are you staying put with metals?
Oh, yeah,
or are you now
100%.
wondering that maybe the time is now turning?
No. I'm very bullish metals. And again, remember metals, everybody, when steel 1.5, 2 years back, don't touch it, dumb industry. Oil was 27, I like those situations, and they usually have very huge payoffs if you get them right. I like them even now. I like the steel basket, and I like steel as a commodity. I like aluminum as a commodity. I like the entire commodity space.
You know that there is that only one pocket which is completely rubbish right now in the market. Even pharma, the story is now, it seems to be, turning. You've got those EIRs and the odd US FDA approvals. IT, at least TCS, wasn't bad, if not great. PSU banks. The growth has still not come back, and there doesn't seem to be any hope. The first few flash numbers from a Lakshmi Vilas or a South Indian bank, NPAs continue to be a problem. I know you don't like this story. I know about a year and a half, you just sort of forewarned everyone, watch out, NPAs are going to be a big mess when it comes to PSBs. But is that going to be a hunting ground for you at all?
No, I don't. Knowing what I know, about the NPA situation, I'm not a believer in the PSB space at all. It's just not that I like to have every single stock in my portfolio which is troubled. You have to buy something which gives you a bit of peace of mind also, right? So banks, and particularly PSU banks, I'm not going out there buying them.
Okay.